GameStop stock is currently trading at $27.58, marking a significant intraday jump of roughly 4% from its previous close, as the market processes one of the most unexpected corporate maneuvers in recent memory. If you thought the volatility of years past was behind us, the reality of this morning's activity proves that GameStop remains the ultimate outlier in the equity markets. While the broader market might have expected a quiet period of consolidation following recent earnings, the reality is that CEO Ryan Cohen has fundamentally shifted the narrative by launching an unsolicited $56 billion bid for eBay. This isn't just another headline for the retail crowd to cheer. It is a massive structural bet that attempts to bridge the gap between a struggling physical retailer and a global e-commerce giant. The stock's current momentum is being fueled by high-volume institutional activity and a massive influx of retail interest across major investing sites, where the debate over this acquisition is reaching a fever pitch. The common ground here is easy to find. Most investors view GameStop through a very specific lens, a legacy retailer trying to find its footing in a digital world, largely supported by a dedicated base of individual traders on platforms like Robinhood and Reddit. The general belief was that GameStop would continue to lean into its cash reserves and slow burn its way into a niche collectibles and digital hardware business. However, I want to challenge that perspective. The bid for eBay at $125 per share suggests that management no longer believes organic growth is enough. They are going for a total transformation of the balance sheet and the business model simultaneously. This creates a fascinating tension between what the market expects from a turnaround and the aggressive reality of a $56 billion hostile takeover attempt. When you look at the recent daily swings, the technical setup is becoming increasingly complex. Trading volumes today have already eclipsed the 20 million mark, which is more than double the recent daily average. This kind of liquidity suggests that we aren't just seeing retail momentum, we are seeing larger players, perhaps those utilizing the Interactive Brokers platform or institutional desks at Fidelity, repositioning themselves for a long drawn-out corporate battle. The institutional activity around the $26 and $27 price levels shows a significant amount of support, but it also indicates a high level of speculative risk. If the eBay board rejects this offer, which many analysts expect, we could see a sharp reversal, but for now, the market is pricing in the audacity of the move. If you are looking at online investing options right now, you have to weigh this momentum against the macroeconomic pressures. We are in an environment where interest rates and consumer spending are under a microscope, yet GameStop is acting like a tech growth company from a decade ago, unbothered by the traditional rules of retail valuation. For those using self-investing tools or individual brokerage accounts, the question isn't just about the chart, it is about the feasibility of a $56 billion deal for a company with a market cap that was recently hovering around $11 billion. This disconnect is exactly where the expectation versus reality framing becomes critical. The expectation is that GameStop is a meme stock, but the reality is they are attempting to deploy capital in a way that would make a private equity firm blush. Let's look at the sector momentum for a second. While other retail stocks are struggling with inventory and foot traffic, GameStop is decoupling from the sector. This intraday move is a direct reaction to the news, but the underlying institutional positioning has been building for weeks. We've seen a steady accumulation of shares that suggested something big was brewing. Whether you're tracking this on the Robinhood app or through more advanced tools like the Fidelity trading platform, the signal is clear. Volatility is back, and it's being driven by a fundamental shift in strategy rather than just social media sentiment. The business model of GameStop has historically been built on the sale of new and used video game hardware, software, and accessories. Over the last few years, they have tried to pivot into collectibles and PC gaming with mixed results. The older reports showed a company that was successfully cutting costs, bringing selling, general, and administrative expenses down, but struggling to find top-line growth. The reality of their current situation was a slow decay of the legacy business. This eBay bid is a burn-the-boats moment. By attempting to acquire a company with a far more robust digital footprint and a different user base, Cohen is trying to solve the growth problem in one fell swoop. For those of you managing your own portfolios through SoFi Invest or Schwab Intelligent Portfolios, you know that diversification is key, but GameStop has always been the stock that defies the standard intelligent portfolio logic. It doesn't fit neatly into a value or growth bucket. It is a high beta play on the vision of its leadership. This latest development adds a layer of event-driven trading that makes technical analysis difficult because the news cycle is now the primary driver of the price action. Institutional activity in the options market is also through the roof, with traders betting on both extreme upside and a total collapse of the deal. Comment below how many shares of GameStop stock you currently hold and what your average price is. I'm curious to see how many of you have been holding since the 2021 volatility versus those who just jumped in on this eBay news. Looking at the future outlook, there are two distinct scenarios. In the first, the expectation scenario, GameStop fails to secure eBay, the stock gives back its recent gains, and we return to a narrative of slow retail transformation. In the reality scenario, this bid is just the opening salvo in a broader consolidation of the digital marketplace. Even if eBay isn't the final target, the fact that GameStop is even at the table with a $56 billion offer changes how the street has to value their cash and their ambition. If they can convince shareholders that they can find $2 billion in annual cost reductions, the math starts to look very different for long-term holders. However, the risks are just as massive as the potential catalysts. A failed bid could lead to a broken deal discount, where the stock is punished for its perceived overreach. Furthermore, the integration of a company the size of eBay would be a multi-year project fraught with execution risk. For investors using online investment platforms, this is the ultimate test of conviction. Are you betting on the retail business, or are you betting on Ryan Cohen's ability to act as a quasi-activist investor with a massive war chest? The contrast between the market's expectation that GameStop was a dying relic and the reality that it is now an aggressor in the M&A space is the core of the current GME story. Whether you use the Fidelity mobile app for quick trades or interactive brokers for deep dive technical setups, the data shows a stock that is once again untethered from the boring parts of the market. The intraday movement we are seeing today is just the beginning of a new chapter in the GameStop saga. In summary, the central insights today revolve around the sheer scale of the eBay bid and the market's initial positive reaction to that audacity. Expectations of a quiet turnaround have been replaced by the reality of a massive, high-stakes takeover attempt. The audacity of this move comes from GameStop's willingness to leverage its unique position and retail support to challenge much larger entities. As we watch the price action at $27.58, remember that the gap between what people believe about this company and what is actually happening on the ground is where the biggest opportunities and risks always lie. Stay focused on the volume and the institutional flow, as those will be the true indicators of whether this move has legs or if it's just another momentary spike in the long, volatile history of the world's most famous meme stock. GameStop has once again proven that just when you think you have it figured out, the reality of their strategy shifts the ground beneath your feet. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.